customer for the collection and payment of taxes, advise the client to pay. So about maybe 55%. Or in total, we've been more like nearly 60%. We cover about, as tax agent, we cover about 60% of the revenue of the country. Now we touch a bit on the economy. Since 2018, there's a trade war between China and US that have affected China, but some of the Southeast Asian countries have benefited, especially Malaysia is the biggest winner, whereby many of the China business have been relocated to Malaysia. So especially in the field of electronic integrated circuit, liquefied natural gas, and communication apparatus. For the export, Malaysia export has increased. Surprisingly, most of us thought it's Selangor that had the biggest export, but actually the ranking is Penang is number 1 with 35 billion, followed by Johor, then Selangor, Sarawak, then KL. That's why maybe from the trade you can see the Penang property can hold on, and Johor contribution has increased a lot, and especially with Iskandar or this, so some of the property prices has gone up. So the property prices expected Johor to surpass KL. So it looks good. The economy looks good for Johor. Here, this is a statistics for export. So export manufacturer have the biggest contribution to export, especially electronic and electrical products. This come from Penang, petroleum products from Sabah, from Sarawak, palm oil based products from Selangor and Johor, chemical and chemical products, optical, scientific equipment. All these manufactured goods constitute the biggest export of Malaysia. Lately, there are talks about big news on data center. Malaysia currently contribution to data center in Southeast Asia is only about 20%. But come 2028, our contribution is about 45%, going to be bigger than Singapore, because there are 12 data center, some work in progress, some been approved. Johor has 7, Selangor have 3, KL 1, Negeri Sembilan has 1. So this will bring a lot of jobs and prosperity to the country. The biggest winner is Johor. Here I'm talking about, I have a slide here about tax system. So this slide, I want to put things in perspective, whether after I explain this slide, then you would know whether Malaysia is a fair country, is it good for the citizen with this sort of tax system compared with the developed world. First, income tax. The spelling is wrong, income. So income tax, so I put down comparison between Malaysia and the developed world like UK, because I graduated in UK, studied UK law and tax, so I use UK as an example. And furthermore, we are the former colony of UK. So first, with income tax. Income tax, Malaysia, income tax is on what we earn in Malaysia. Will be taxed in Malaysia. But there's another tax called worldwide income. The worldwide income tax system is applicable to most of the developed world like UK, Europe, US, Australia, even China have implemented worldwide income. So the worldwide income, the tax rate is higher, 20, 40, 45%, let's say in UK, the tax rate. In the developed world, Australia, I think is 47%. But Malaysia is only 30. So what is the difference between the importance about these taxes, local income and worldwide income? Some of our family and friends who have migrated to places like Australia. So what's the impact when you're Malaysian, when you become PR and say in Australia, what is going to happen? So in Australia, and let's say Australia, most of us are familiar with. Some of our friends or family move to Australia. As long as they are the tax resident in Australia, then they are subject to worldwide income tax. So what does it mean? So if they were to earn, let's say 50,000 Aussie dollars, then in the tax return, they have to include the income earned overseas, includes from Malaysia, the dividend income, the EPF interest, if they have some consultancy fee, director fees, all this will be included. And if there are other income, let's say the rental income from Singapore, so in the tax return, as a tax resident in Australia, they have to include the Australian source, various sources of income, plus other income across the world, like Malaysia and Singapore. Then they add up the total income, then so we subject to higher tax rate. Then minus, if there's a double tax treaty between these few countries with Australia, then they allow the tax suffer as a deduction. Then any shortfall in taxes have to pay it over in Australia. So be mindful if you are on a worldwide income. So before you migrate, you must understand this. And this one also will affect some of us as parents. We buy property under children's name. They put under children's name, and then they have to in Malaysia, they are non-tax resident. They have to pay flat income tax of 24%. 24%, there's no tax relief. So let's say they earn the net income 30,000. So 30,000, 30%, the tax rate 30%. So 30,000 times 30% is 9,000. But if you are put on in the spouse name, if the spouse is retired, so the 30 income with the tax relief, the tax will be zero. But you put in the children's name, then the children have to pay a non-resident tax of flat 30%. So it's 9,000. So not only that, if your children were to work overseas, let's say UK, then the children might have to suffer higher tax rate of 40%. If 40%, so they have to report the income in UK. So UK have to pay 40, Malaysia 30. So the differential, they have to pay 10% differential in UK. So be mindful that Malaysia have local tax system where only local income is taxable, and overseas not taxable, not need to report. So this case, I have a case. 20 years ago, I have a client. He was 73 years old at the time. Brought two children every year to see me to sign the tax return, because the father had bought one condo each for the two girls. So then I told my client that you consider transfer the property to his wife's name, two condo. So the wife is not working, was not working. So the wife will pay lower tax. So they save some tax. So in this particular case, is the children have to pay tax in Malaysia is a non-tax resident. Then in UK and US, one in UK, one in US, they have to report worldwide income, where they have to suffer higher tax rate, about 10% more. So in this case, so when the two property was switched to the wife name, so the tax was saved in Malaysia and also in UK and Australia. So in the end, I thought you view it to the two girls. So they took my advice and they did what I told them. For corporate tax, Malaysia have a lower tax rate, 15.4% for the SMEs, whereby in UK is 25% higher tax rate. Capital gains tax, capital gains is for investment. All investment include properties, shares, in listed or non-listed, arts, antique, precious metal like gold, diamond, sapphire, all this, silver, all these are subject to capital gains tax of 10 to 24%. Malaysia, we only adopted hybrid, a bit of capital gains, like property, RPG, real property gains tax ranging from 0 to 30%, and whereby most of us, we hardly pay 30%. Most of the time we pay 0 if we plan properly, under personal name. For company, normally I would think 90% chance that we pay 10% only for Sdn Bhd. For individual, I think that 90% chance we pay 0. If we are subject to tax, we still can adopt to take on one residential property exempted once in a lifetime. But I think 99% of us don't use the exemption. And for unlisted shares, we just introduced the capital gains tax is 10% for share that we receive or allotted to us in 2024. Once we dispose of, we subject to 10% on the gain. But for shares that we have taken on, allotted to us before 2024, we are only taxed at 2% on the gross disposal value. So the capital gains tax here is the asset duty, inheritance tax. Malaysia don't have, abolished in 1991, and in the developed world is 40%. I'll elaborate more on this. SST, sales and services tax, VAT. There were talks on VAT, GST, but it didn't come through. So far, our sales tax and services tax is 6% or 8% for services tax, sales tax 10%. Whereby in the developed world like UK, VAT or GST is at 20%. So ours is a lot lesser. Dividend tax, in the developed world, some have introduced dividend tax, like UK, China. Like in UK, it's 9%, 34%, 39%. China, I think, is 20%. Singapore don't have dividend tax. Malaysia have dividend tax of 2%, effective 2025, on dividend received above 100,000. So this dividend tax, there are some tax planning here. Some with the market says this dividend tax is double taxation. I wouldn't disagree. But this 2% dividend tax, some businessmen, they're in the rush to declare all their retained profit by the end of this year. I think before you decide to declare, you have to consider, maybe you can keep some retained profit here for future to declare dividends and for the purpose of your J form. Currently, dividend, there's no column in Borang J for dividends. So if you earn 200,000 salary income, dividend 300,000, so your J form will only show 200,000 that your salary income. Dividend not included. Why? Because dividend after company pay dividends, after company pay income tax, so the balance of the profit after tax is no more tax. So when the company declare dividend, so the dividend voucher now only one figure, dividend X amount 200,000 finished. 10 years ago, under the section 108, the franking system, the time dividend was not the final tax. So the final tax is when the individual natural person receive the dividend, then the tax is recomputed in the tax rate of the individual. So about 10 years ago, that one was abolished. So section 1 oil tax credit also taken off. So at the time, from that time onwards, the dividend voucher only show one number. So with this dividend tax, then the Borang BE we have additional column on dividends. So your J form income will be all other type income plus dividend income. So for tax planning purposes, let's say if you want to boost your J form, so try to keep the retained profits, so you can declare dividends. Assuming that some of my clients say, the business have been dropping, so I cannot sustain the the salary. Let's say they used to get 30,000, now left with 10,000. So your J form will look very weak. Instead of 360,000, become 120. So if you want to augment your income, so if the company have retained profit of 5 million, so you can plan the dividend, you can receive 20,000 a month. So you pay 20,000 a month as a dividend, and your salary income is 10, so you get 30,000 per year and per month, 360 per year. So your dividend income, you show 240,000 a year. First 100,000 is exempted. So 140,000 only taxable at 2%, there's only 2,008. So in that case, your Borang J will be strong. So that would assist you in when you get loans from the company, from the bankers. So if you were to do that, you want to convince the bank that your dividend is a regular income, you can consider pay monthly dividends for tax planning. Here I touch a bit on GST. Only Malaysia, the GST, SST, sales and services tax. In Asia Pacific, the GST collection is about 26% of the total collection. Indonesia 29, Thailand 24, Vietnam 24, Singapore 17, Malaysia only 10. Why? Because Malaysia only collect sales tax 10%, service tax 8%, with exception of some item 6%. So if Malaysia would, why the government always talk about introduce GST? Because with the introduction of GST, you can get up to about 20%, more like 18 to 20%, because the government will give more exemption to take care of the B40. So now at 10%, if we were to introduce GST, we should go back to between 18 to 20% of the contribution. So my rough guess is they will introduce this. They have to introduce sooner or later. If they were to introduce, the quickest should be after the next election. I'd like to touch a bit on inheritance tax. which we have these taxes, was abolished in 1991. So the time was abolished in 1991. At the time, the tax rate was about 10%. A different tax rate. This one just show an impact of inheritance tax in UK. Let's say if the parents were to leave behind a house worth £1 million, the exemption is £325,000. The chargeable income is 675,000 at 40%. So the tax is 270,000. So before the land title can be transferred to the children have to pay the taxes. More often than not, the children will have 270,000. So the chance that the children will have to sell the house, put up for sale or auction, take the money, pay inheritance tax before the children can take the money. So this inheritance tax has big impact. This Robin Hood tax. Most of developing world don't have this tax, but will be more common in developed countries. Malaysia, this inheritance tax, people are not concerned. That's why trust, all these things are not commonly practiced in Malaysia. Like in the developed world, this is bad material, 40% bad material. So the rich will do all sorts of scheming, try to mitigate, reduce, or avoid inheritance tax. Let's say, depend on how strict the country is. Like UK, very difficult to mark about with inheritance tax. Like in Malaysia, very simple. If there's an inheritance tax, so what we do is, what the people did last time before 1991 was, they just pre-sign the share transfer form, the title transfer form, all this, undated. Let's say if our parents pass away today, but the document already signed, then they just put the date within 1 month. Let's say 25 days ago, chop it, then send for stamping. That means the transfer was done, was dated before when the person was alive, is alive. So inheritance tax you can avoid. But UK you cannot avoid because of the 7 years rule. 7 years rule. Let's say in this case the tax is 270,000 if the property was not transferred in a lifetime. Let's say if the property was transferred within 1 year, so the government will give 20% discount on this 270,000 tax. So that means you still have to suffer 80% of the tax. But if the property was transferred 2 years ago, you give you 30% discount. 4 years ago, 40%, 50%. So maximum within on the 6th year, they give you 80% discount on this 270. So you still cannot avoid. Like in Singapore, there's no inheritance tax. That's why Jackie Chan, Kung Lee, Jack Lee, Facebook, boss others, they adopted Singapore citizenship. Not because they like Singapore, because of no inheritance tax in Singapore. So the people who are rich, they try to avoid, if they're not patriotic, they try to avoid the country that impose inheritance tax. So in our case, especially for the rich and the high net worth individual, you're Malaysian, you don't simply change your citizenship, become British, become Japanese, become Taiwanese, become French, become Americans. Then inheritance tax we take off about 40 to 50% of your wealth. So be mindful of this inheritance tax, and also you are Malaysian, but your children are British. Others, so you also have to be careful when you give asset to them. So I come to the last slide about taxation in Malaysia. So Malaysia have very low SST, where the SST only contribute about 10%, but Asia Pacific 24%. So consumption tax law, no tax on worldwide income. So before you become a tax resident of another country, be mindful. Normally when we move, if we migrate to a country that are cleaner, more beautiful. So that means the tax will be higher. There will be on more of the worldwide income. If you have asset all over the world, try to avoid being a tax resident in a country that practice worldwide income. So you should go for the country that only have local income like Malaysia. But your body can be around the world, no need to be in Malaysia. So you can spend 365 days away from the country, but you keep your Malaysian tax resident. Whereby capital gain tax, Malaysia will hardly suffer any capital gain tax because the share that we have is our individual name. So when we sell off the share under personal name, not subject to capital gain tax. And RPGT, if we make money, normally we don't sell. Then we keep the property under our own name. I think more than 90% of property are in personal name. Only 10% are in Sdn Bhd. So you want to suffer tax, the Sdn Bhd, more often than not, we pay 10%. So the capital gain tax is less insignificant. So I would think our capital gain tax collection less than 0.1%. Then the next best thing is for the rich one, there's no inheritance tax. I.e., if we leave behind 1 million pieces of Musang King, so the Musang King will still inherit by our children. So you can say the 100 the Musang King, there's no stamp duty, no transfer, so nothing, no inheritance tax. So in conclusion, Malaysia is a semi-tax haven. So we are blessed. This round, there's no hoo-ha, very simple. The perspective, we are okay. So the tax is fair. So it's good for us to keep the resident in Malaysia, not where we only pay local tax with no worldwide income, doesn't come into Malaysia, and no inheritance tax. With that, thank you very much. If you all have any question, you can post in the chat box. But if you have something urgent that you want to call me, you can call me personally. My number is 012-399-0733. Thank you very much. I pass back to the MC. Thanks.
Hello, hello. Hello, testing mic. Yes. Can you hear me? If can hear me, please press 111. Yes. Yes, very good. Atan 111, Atira, hi, 111, thank you, thank you. So let's move on to the personal tax. So let me introduce myself. I'm Cindy. I'm from the Adrian Yo Tax KL branch. So I'm the tax director, same with NG. So we KL branch have just started this month in Aurora, Bukit Jalil, KL. So let me run through with you on the personal tax. So actually in year budget 2025, there aren't many changes in the personal tax. Yeah, they do not have many changes. So, but we will explain to you some of the key updates or the highlights on the personal tax in the next half an hour. So first thing, of course, like we will mention about the foreign source income, housing loan relief, 2% dividend, medical expenses, and at last with health and elderly care exemption and others as well. So the first one will be foreign source income by individual. I believe some of us, we have foreign source income by individual. What does that mean? If you have the foreign source income that you have profited in the overseas and now you want to bring it back to Malaysia. So the foreign source income that you remit to Malaysia is exempted by tax. Initially, it was entered in year 2026, but now income tax says it has been extended up to another 10 years from 2026 to 2036. So what does it mean? So if you have dispose of your company shares in overseas, say in Singapore. So the money that you bring back to Malaysia is not subject to any tax. Okay, so but doesn't mean that you do not need to keep any documents. You are still need to keep the supporting documents for the proof of the foreign investment, like the disposal of the shares, or you have any property, say in Australia, one of my clients. So they say, how about the money, the profit, the income remitted back to Malaysia? Am I liable to personal tax or not? The answer here is no until year 2036. So next one is the housing loan interest relief. This is the relief is only for the first home buyer. When you first purchase of your home, so you are entitled to claim the relief on your term loan interest. For example, if you purchase the house is less than 500,000, then you're liable for a tax relief of 7,000 per year, which is up to 3 years. But the SPA, that means the sales and purchase agreement, you have to be executed from 1st January 2025 to 31st December 2027. Okay, to us, maybe this is not liable to us. Okay, but you may consider how about your children? How about your niece or your nephew? Then maybe it is a good time for you to plan ahead for your children. So let's say if 21 years old and onwards, then you can buy a house and with the bank loan. That's why you may consider A. Or you may buy a house for your children, which is tax exempt for the loan interest for 3 years. But they only limit you up to 7,000 per year. At the same time, for the first residential home buyer, if your house price is less than 500,000, you will get 100% of the stamp duty waiver. Okay, the stamp duty you need to pay if you buy for 500,000 house. Stamp duty you are required to pay is 9,000. But now, government, they have exempted this stamp duty of 9,000 for the first home buyer. So what are the conditions? So one condition is you must use it for your own stay. It cannot be the investment properties. Second, this is a first time buyer. Okay, so subsequently, how about the house price that you purchase is from 500,000 to 750,000? So the relief will be reduced. You can only claim 5,000 per year for the 3 years. But bear in mind, this is only applicable when you first, pay for your housing loan interest. Okay, it's not the date when you sign the SMP. Yeah, of course, when you first service of your house loan interest, from that year onwards, you consider you can claim the total relief. So the next one will be the medical expenses relief. Maximum you can claim is 10,000 only. But you may ask, Cindy, how come I see serious illness for your staff, spouse, and children? I can claim 10,000. Fertility treatment, I also can claim 10,000. No, it doesn't mean like that. That means all this column that we spell out in this column in total, here, you can claim maximum up to 10,000 only. Yes. So, for example, what are the serious illness for yourself, for your spouse, or for your children? So, is the serious illness is something like cancer, Parkinson, AIDS, leukemia, renal failure. So, fertility treatment also you may claim. Vaccination for yourself, for your spouse and children also, which is only you can claim maximum up to 1,000, which means this 1,000 is inclusive of the total relief, which is you can claim up to 10,000 maximum. Dental examination for yourself, spouse, and children. Okay, whatever highlighted in the red highlight column, this is the expansion scope. The first one is purchase of the self-test kit. Also, it has been expanded. Sometimes we will purchase the influenza test kit for the home use. The expenses you may claim for a relief, which is up to 1,000. Sometimes we purchase the self-testing medical devices, which is like the oximeter. You may make a claim as well. The full medical checkup. Last time, only full medical checkup then we make in a hospital is tax deductible. You're able to claim a tax relief, but now they have extended to a clinic, normal clinic. You also can make a claim under this medical examination. Okay. The third one is the sports activities relief. You can claim 1,000. This relief has been in a separate tax relief after the budget 2024. Last time, it has been included in your lifestyle relief of 2005. So we can claim this relief since year 2024 and up to 1,000 ringgit. So how we can claim? Actually, we can claim for the usage of yourself, your spouse, your wife or your husband, and your children as well. Now it has been extended the scope, even you can claim for your parents. So what are the expenses that we can claim? First thing, let's look at it. You purchase the sport equipment, okay, like the badminton racket, rental or entrance fees to any sports facilities, rental of the badminton hall. Yeah, like my children, they love to play badminton. So sometimes they want to rent the badminton hall. Is this expenses deductible? The answer here is yes. Yeah, I think 1 hour, it could cost you about 16 ringgit per hour. Sometimes my children, also I have to pay for the registration fees for the competitions, maybe $200-300. So I can keep the receipt. Okay, we cannot show the income tax, the bank-in slip that we paid to the organizer. You must keep the receipt or the invoices. Gym member fees, yeah, if you love to go to the gym, yeah, it's a sports lover, then you can keep the gym member fees and claim. How about the training fees? Here emphasize that training fees. Sometimes like I paid the badminton training fees to a badminton coach for my children. It may cost me about 1,000 per month. Yes, but this training provider, you have to do the background survey of who are the training provider. This training provider must be approved or registered with who? Okay, let's look at it with the Commissioner of Sports. Okay, and the activities, the sport activities have to be listed under this Sports Development Act 1997. So what are these sports? These sports includes like badminton, football, netball, futsal, aquatics, gymnastics, judo. Many sports are included. So you can easily to go for the internet and search Sports Development Act 1997. Okay. So start from, because we haven't declared our year 2024 personal tax yet, so we still have about 2 months. If you do not realize of such a sports activity relief, so within these 2 months, you can start and collect of the receipt or invoices in regards of any sports or rental that you pay for the facilities that approved by the under the Sport Development Act. Next one is the parents' medical care expenses. Just now is 10,000, which is related to ourselves, spouse, and children. Now is the parental care for our parents. Medical treatment at the clinics and hospital, we can claim, but this one is only 8,000 per month. How about sometimes we send our parents to the daycare home? Daycare now is very famous, or they are used to send the parents to the daycare home. It's not necessary. Maybe nursery is on the day and night basis. The parents, they stay at the nursery home. But the daycare home is like the child care. So when we go to work, we send our parents to the daycare. So when we finish work, then we fetch our parents back home. So this is the daycare centers and the nursing home. The payment that we make to them is tax. We can claim for the tax relief. Dental treatment as well. This is for the normal dental treatment. It do not include any cosmetic dental treatment like the whitening of your teeth, which is not allowable. The full medical checkup and vaccination as well, which is only limit to 1,000. Bear in mind again, like just now the expenses, this 1,000 is inclusive in the 8,000 relief claims. Child relief. How about child relief? Okay, so whoever have the children below 6 years old, actually we can claim a relief up to 3,000, but it only for per household. That means it's either one, whether your husband or yourself, you can make a claim. Cannot be claimed by both parties. The children is up to 6 years old only, and the kindergarten or the child care, you have to check with the principal whether they are registered under MOE or under Domestic Social Welfare, DSW. If they are registered with either one of these parties, yes, the payment, the child care relief, the child care expenses that you pay to the center, kindergarten, is eligible for the child care relief. But now it has been extended up to 2023. So if you didn't claim any child care relief all this while, so now you may consider, I should ask the principal, yes, whether they have registered under MOE or not. But if you send your child care to the auntie house or to the private child care, so I don't think this relief you can make a claims because they are not registered under DSW or MOE. Okay. I'm not sure how much is a child care now. I asked my friend, they say if a day and night, it may cost you 2,000 plus. That one is a private auntie. But you are sent to the registered child care center for the full day, they may charge you 1,600 to 1,008. Some of the child care center. Of course, it's not the baby sit only. They will give you some schoolings. So after schoolings, for the first half day, the second half day, they will put your baby to the sleep and story readings and some snacks as well, plus some activities. Okay, so it's not, in nowadays, it's not cheap, okay, to rear a kids. Agree or not? If you agree, please put yes. It's not cheap. Okay, if you have one children, it's not cheap. How about you manage to afford for another children, Sarah? Yes, it's not cheap. Okay, next one. This is the tax exemption on the childcare allowances. What do you mean of childcare allowances? It's different from the childcare relief. Huh? Yeah, childcare allowances is when your employer is very good. That means your bosses are very good. They give you the childcare allowances every month. Whether they give you the allowances included in your salary or they pay directly to the kindergarten or to your childcare. So if this is happen, your employer give the staff the childcare allowances, the IRB says what? They say they will give you exemption. Up to how much? Up to 3,000 per year. That means the individual will get the exemption of the up to 3,000. If your company provide you childcare allowances of 1,000 per month, 1 year will be how much? Times 12 months, right? So 1 year will be 12,000. But IRB say you have the exemption of 3,000 now. Then how much will be liable to tax? You will be liable to tax of 9,000 only. Okay. Now, this is the new one under the budget 2025. And it also inclusive of what? The elderly care for your parents and even your grandparents. Then how to prove? Then you have to prove with the birth cert. This is my parents. How about your grandparents? You have to prove the birth cert of your parents also to show that your parents' parents, that means your grandparents, okay? The relationship between you and your grandparents. There's another, okay, we will move on to the private medical scheme and deferred annuity relief. Okay, so Tan asked in this case, if we receive the child care, there's a question on the floor. In this case, if we receive the child care allowances, can still claim for child care relief paid to the child care center or not? Okay, because you see, your child care allowances, the money is fully sponsored by your employer. Actually, you cannot claim because this is not from your own pocket. You can only claim the child care relief of 3,000, which is you pay the cost on your own. Okay. So if this sponsored by your employer, you cannot make any claims. Yeah. So let's move on. For the private retirement scheme and deferred annuity relief. Do you know that according to the World Bank estimates, about 25%, of the Malaysian workforce, they are self-employed. So what does it mean of self-employed? So it could refer to the sole proprietor and partnerships, or the 老板哈，自己做生意的. So 25%. So when you are the bosses, especially in the sole proprietor, so we do not have the EPF. Because when we are in the employment, so our bosses will help us to contribute the EPF. But there's another alternative. You may contribute this scheme we call PRS scheme. This one is equivalent to the EPF, and they may give you the dividend also on annual basis. So the government says if you have subscribed this PRS scheme, then you also can claim the tax relief of 3,000. And now they have give you extension from year 2026 to 2030. That means this is like your personal own savings as well. So the next question you may ask me, hey Cindy, I'm not sure about this. Then how should I go and subscribe this private retirement scheme? I think it's pretty simple. There are few service provider which is approved by the government. Like who are they? They are like you can purchase this through the public mutual, through the AIA and M-Invest as well. Okay, so there are conditions also because they don't want you to put in the money and then you withdraw the money within the same year. So there's a terms and conditions. If you withdraw before 55 years old, and when you withdraw the money from the PRS scheme, so they will charge you a penalty. We call it penalty of 8% of the withdrawal amount. So which is they discourage you to withdraw. Okay, when you withdraw the money when you're less than 55 years old. Of course, there are some conditions that allow you to withdraw without any penalties. So what are the conditions? The first one is upon the death. Second one is you have the health problem, so you need the money for your health expenses. So they allow you to do so. Education and medical insurance relief. I think this is very normal for us. You can claim this relief. It has been increased from 3,000 to 4,000. Yeah, it is incurred for yourself, spouse, and children. I think nowadays the medical insurance relief, the medical insurance is very expensive now. It's very, very expensive, especially the medical insurance. Yeah, it has been increased over the years. That's why my husband also asked me, Cindy, you want to upgrade of your medical insurance or not? I said, yes, okay. Then immediately he asked me, you have to pay extra $600 per month. $600 per month, that means 1 year. If I upgrade to the better package, 1 year it will cost me $7,200 to upgrade of my medical insurance. I'm not sure upgrade to how much. It's upgrade to a lot, means about 1 million you can claim per year. Yes, and then with certain protection as well. But I have to pay $7,200 extra per year on top of my existing insurance premium. So this one you can claim from year 2025 onwards. That means we will always claim up to the max level. Definitely. Yeah, because normally plus yourself, your spouse and children definitely will be more than 4,000. Okay. Okay, let's move on. You see this SSPN, in short, is Scheme Simpanan Pendidikan Nasional. Actually, I've been claiming this relief for the past 6 or 7 years. It can claim up to 8,000 per year. It has been extended for another 3 years up to year 2027. That means currently in year 2024, we still can claim. That means 2024, husband and wife, we still can claim 8,000 each. Yeah. But when it comes for year 2025, it has been changed. This SSPN claiming. They say IRB allow us to claim either parents. That means one household, they allow you to claim 8,000 only. You may choose whether your husband claim or the wife to claim under this SSPN relief. So either one can claim. So tax planning is here. You may choose who is paying the higher tax bracket rate. So if your husband income is higher, so just let your husband to claim it, or let your wife to claim it if your wife income is higher. But they say, and it will be claimed on the net savings amount only. Later, I will show you how to calculate of the net annual savings. Okay, net annual savings, that means sometimes we deposit the money in a year. If we need the money, we withdraw the money. So it will be counted on the how much is the net savings that you deposited in your SSPN fund. You can claim on the net savings only. The next question you may ask me, hey Cindy, hey, I don't know. So thank you very much for informing me. But how should I go about it? Very easy. You may download this app, My PTPTN apps, or you just Google search to the PTPTN official portal. You can even buy online also, or you can go to the nearest their authorized agents. It could be the bank. Okay, they will help you to make a deposit to the SSPN accounts. So let's look at how to calculate of the movement funds. Just now you say net annual savings. Okay, for year 2022, let's say I have deposited 8,000 in year 2022. How much can I claim? I can claim maximum 8,000 only, right? Yeah. And then move on to year 2023. I put in 10,000. Can I claim 10,000? Can or not? Cannot. You still can claim 8,000 only maximum, remember? Okay, 2024. I put in 8,000 again. Hey, but I have the business difficulty. My husband need money, so I withdraw 16,000. At the end, I have a net drawing of 8,000. So can I claim anything or not? Cannot. That's why it's zero here, because it's a net withdraw. In year 2024, my business become better. Good, now I have money. I want to put in 24,000. How much can you claim? Still 8,000 only. So what is this is the net annual savings. This is just a scenario for your better understanding. But for me, like my husband and I, so normally we will withdraw the money in January. We withdraw, let's say we withdraw 8,000. But as December, end of December, then we'll put in another 16,000 again. That means minus 8,000 plus 16,000, then I can claim 8,000. So this is what we do normally in order to make a claim for the SSPN. But for year 2025 onwards, it's either my husband or I, we can claim only. So what are the benefits? So let's see. Any one of you, do you have any money in your FD? I believe so, correct or not? So don't put the money in your FD. So I will advise you to put the money in this SSPN fund. Let's say you withdraw the 8,000 from your FD account, then you put into this SSPN fund. If your personal tax rate is 24, this is a scenario, it's 25%. So this 2,000, how am I getting this 2,000? Is 8,000 times 25%. So I can claim, I have the what? I save, tax savings is 2,000. And they give me the dividend annually. It could be 4%, 3, 4, or 5%. For example, I put 5% here. So I will get a dividend or interest of $400. So my total return value is 2,004. So how much is my investment yield? It's 30%, right? Isn't it good? It's good. You put in 8,000, in return you are getting 2,004. So it's 30%, 2,004 over 8,000. So you tell me, what kind of the investment is better than this 30%? Yeah, will you consider this? So the quicker way is you have to straight away click into this and check more about this information, SSPN, okay, to make a 30% return. If not 30%, at least 25% return. Depends on your interest rate and depend on how much is the interest, depends on your personal tax rate and how much interest paid by the SSPN. EV car, anyone have Tesla? Or you're planning to buy the Tesla? Or any EV car, not only Tesla. Yeah, if you buy the EV car for your conveniences, I think my friend just bought an EV car. Yeah, for your conveniences, they will buy a charging machine. She told me she need to pay about 1,800. It's cheap, 1,800 to install at her house. Okay. So now the government give you another expansion of the scope. They say if you buy the household, food waste composting machines. I checked the Google search. This machine will cost about 1,000 plus, 1,008 to 2,008. Yes. Now you still can make a claim under this relief. So plan yourself, but these two items, you add up together, they allow you to claim up to maximum of 2,005 only. And for this household food waste machine, you can claim once within 3 years. That means they expect this machine will spoil every 3 years. So they encourage you to buy it again after 3 years. Okay, so you have to timing. You want to buy the EV car, and at the same time, it's the husband, they want to buy the EV car in year 2025. And the wife also wanted to buy what? The food waste composting machine. So you have to what? to do the timing, you have to discuss with the husband, why not I buy first in year 2026 at 2025. Then you defer to buy your EV car in year 2026. So each year you can claim a 2005. Okay. So next one, 2% dividend. Yeah, 2% dividend. Yeah, QQ asked, okay, if you have 3 kids, how? Yeah, QQ asked about the SSPN. So one household only can claim 8,000 only. You have deposited for 3 kids. It doesn't mean that you can claim 8,000 times 3, 24,000. Maximum, you can claim 8,000 only. From year 2025 onwards, 8,000 per household. But this year, 2024, you and the husband also, you can claim 8,000 each under husband and wife. Okay, so let's move on to this 2% dividend tax. Actually, this 2% dividend tax is a hoo-ha, within our clientele. But please bear in mind, this is for the individual shareholders only. And it's only applicable to the resident and non-tax resident. So what does it mean here? Resident and non-tax resident means is if you are the tax resident, which means you are staying in Malaysia more than 182 days. How about those not in Malaysia not staying in Malaysia less than 182 days? We consider as non-tax resident. Okay, this is the first criteria. Second criteria is even though the individual you're holding the shares through a nominees. That means you are not the shareholders, but you holding on behalf of somebody behind because they want to be unseen. That's why they use your name to hold the shares. So in this case, you are liable to pay this 2% tax also. Okay. Another one is this dividend. This is very important. This dividend is distributed by the Malaysian companies. Malaysian companies is referred to unlisted companies like a normal Sdn Bhd or the listed companies Okay, so these are the 3 criteria you are liable to 2% dividend tax. But how much is the threshold? The threshold is 100,000. That means under normal circumstances, maybe above 60 or 70%, we are not liable to this 2% dividend tax because in order for you to receive this dividend income of 100,000, let's say on 5% return, guess how much is your investment you are required to put in order you have this 100,000 dividend. It's 100 divided by 5%, so your investment will be 2 million. Imagine you have 2 million in the listed company shares, 2 million shares in listed company, and you are getting 100,000 per year. Then only what? From 100,000, more than 100,000 and above, then only you are liable to this 2% dividend tax. Let's look at the example here. Okay, this is also again, the individual shareholders receive dividend income more than 100,000. Only you are liable. Only more than that. How about less than that? How about if I receive 50,000 per year? Am I entitled for this 2% dividend tax? The answer here is no. You are not required. Okay. So how about any exemptions or not? Yes, of course, there are exemptions. Dividend income received from overseas. Okay. First one, you're not entitled. And if your company is tax incentive companies and you are, receiving the pioneer status or reinvestment allowances dividend, you're not liable to this 2% dividend. And if you receive the dividend from the shipping companies, also exempted. So please look at this exemption list for further clarifications. Next one, how about you may ask me, every year, I have few million in EPF. How? EPF, you give me dividend, right? So good news. They say what? This is not applicable for the EPF dividends here. Yeah, EPF dividends is not applicable. And then the Lembaga Tabung Angkara Tentera, Amanah Saham, National Bumiputra, Unit Trust also. A very good news also. Unit Trust also not liable to this 2% dividend tax. So only from what? The company tax, which is listed or unlisted. Okay, these are the simple calculation. If you want to say simple, actually not that simple, but this is just want to let you know. If you don't understand, so your tax agent will explain, or normally the tax agent, they will help you to calculate on how much is the dividend tax for all the bosses, yeah. Yeah, the first one, scenario number one, very simple. You just receive dividend income every year. That means if you are the retirees, yeah, my friends' parents retired, and then they received the dividend only because they have an investment in shares. Let's say this dividend income, you minus the what? Exempted the base rate, the base threshold 100,000, then straight away you times 2%. That one is your taxable income. How about in most of the circumstances, we have few streams of income. We may have dividend income plus other income. Then you have to use this formula, yeah? A over B times C is equal to D. Because eventually we need to work out how much is the dividend chargeable income. So we follow this. Okay. So this is the scenario number one. Very straightforward. This is Mr. Brian. Mr. Brian had 500,000 dividend. Then minus this 100,000, minus the tax relief, self-relief. This is a very simple one. The chargeable income is 391,000 times how much? 2%. Then Brian required to make a payment. You know, is liable to tax on this amount, 7,820. Okay, this is the dividend tax that Brian need to pay. How about second scenario? This is a bit, a bit complex, which I explained just now. In this Mr. Brian, they have the salary income, and then have the net rental income. At last, Brian has the dividend income. Total income is 710,000 per year. It's considered a high income individual taxpayer. Okay, let's look at this. If Brian received the EPF dividend amount to 8,000, is this 8,000 liable to dividend tax or not? Yes or no? Can you help me? This dividend income from EPF is liable to tax or not? Is yes or no? If yes, then please put in the chat box yes. If no, just put an O, no. Come, can help me or not? No, Atira say no. How about the rest? Very good. Yeah. So this 8,000 actually is not liable to tax, yeah? Yeah, because it's under the exemption list. Okay, so the Brian will be liable to tax when the dividend received in year 2025 for 70,000. Another tranche of dividend received in 1st June 2025, 180,000. So 70,000 plus 180,000, hence this 250,000 will bring to the tax in year 2025. How about this 15,000? This 15,000 will bring to the tax in year 2026 because going to receive in year 2026. Okay, so now step one, always remember step one, calculate the statutory dividend income first. Remember, total income received in year 2025 is 250,000 minus the exempted threshold, which is 100,000. Then 150,000 we will bring it to dividend tax. Clear? Step one, minus 100,000 to derive at your statutory dividend income. Step two, you need to calculate how much is the chargeable income for the dividend. You use this formula. A, what is A? A over B times C. What is A? A is your statutory dividend income, like just now we have calculated. B is your total aggregate income times C. C is your total chargeable income after you deduct of your personal relief and EPF and life insurance. Then we derive as this D, dividend chargeable income. So we use this D equivalent to 146,066 times what? 2%. 2% is the dividend tax. So we are required to pay dividend tax of 2009. Yes. So what does it mean? That means if you receive the dividend income of 250,000, you are required to pay dividend tax of 2009. So when you work for the effective tax rate means 2009 over this 250,000. So you will get about 1.2% tax only. It's actually not 2% tax because of the what? You deduct 100,000 and you have made the formula to make adjustment on your personal tax relief and other relief. Okay, this is the impact. If you receive 250,000 dividend per year. Okay, let's move on. This is a summary for the year 2029 for your individual tax relief. This is very good. And we have summarized it into the one, I think very handy in a one page. You can see all the summary. You can save in your laptop. You can save in your Facebook laptop and save in your handphone. Or you may even print it out and put up in your desktop or your work place. So we will send this over to you after, together with our seminar slides. Okay, maybe by tomorrow or the day after tomorrow, we'll send it over to you. If you with us until the end of the class. Okay, next one. Wow, this question always asked by my clients. They will ask, hey, Cindy, in which model should I, run my business? Should I run in a Sdn Bhd or in a sole proprietor or is in a partnership? So actually, in order for you to choose for the right business structure, we will ask you the question. We cannot give you the answer on the spot. So I will ask you, what is your business nature? Yeah, first one. Yeah, whether you are liaised with the B2B, business to business, or B2C, business to consumer. And if you tell me, hey, no, I'm in the medical or I'm a doctor. Yes, doctor means your business nature is very high risk. The chances that you get sued by your patient, there is a possibility, which is normal or higher than our normal business. So this is the nature of your business. The second will ask you the financial resources risk. Whether this one, where does you get your bank loan, your money, your source of money, whether you're from your family, from your parents, from your relatives, from your own savings, or from bank. Correct? Yeah. And then your risk. Are you a high risk taker, medium, or low risk taker? So what is your risk appetite? Okay. Tax consideration. That means we will check for you what is the best way and how much is your profit level. And based on your profit level, then we will check for you. And we have the health checking, whether should you run under the Sdn Bhd, sole proprietor, or partnership. Okay, legal liabilities. This one also important, and the risk protection as well for yourself and for your family. Okay, long-term goals. Any short-term goals from now or long-term goals, which means any business expansion plan. If you have the business expansion plan and you want to aim for the MSC market, or you want to go for the overseas, or you want to get more business from the multinational companies, I would suggest you should form a Sdn Bhd, because they want to see the company creditability and transparency of your financial position. Okay. This is a Sanyam Berhad and partnership. The structure, Sanyam Berhad and partnership. If your chargeable income is 1 million, okay, the tax that you need to pay under a Sanyam Berhad is 195,000. If you run this under the sole proprietor, you need to pay 248,000. If under the partnership is 220,000, then you should ask me, hey, I should run under the Sanyam Berhad. Why? It's cheaper, but it's cheaper is by way of the tax liabilities. Yeah, sorry, a bit noisy because I think next door is under the renovation. I think they start drilling now. Can you still, yeah. Can you still can hear? Okay, QQ says step 1 again. Step 1. Is it this step 1? Yeah. Yeah, you can take the snapshot of this step 1, but no worries, the slide we will send it over to you. Yeah, in the email. So we continue. Yeah. This is the things. Yeah. Thank you, Wanchi. Wanchi show it here. So we just shouldn't look at for the tax consideration angle only. Oh, from the tax perspective, is tax savings? Oh, I should go for it. No, you should look at the risk, the nature of business, whether your short-term and your long-term goals. Is your business is high risk or not? Yeah, do you have any partners or not? So we'll advise you accordingly. What form of the entity which is best and suitable for your business nature. Okay. So these are pros and cons when you run the Sanyam Berhad and when you run the proprietor or partnership. When you run the Sanyam Berhad, of course, you have limited liabilities. That means your liabilities is just limited to the paid up share capital. If your paid up share capital is 10,000, so your liabilities will be up to this limit 10,000. So your personal, that means whoever to sue you, they cannot get you personally liable or bankrupt. But because it is you, Sanyam Berhad, and your personal is a different entities. Of course, Sanyam Berhad, you will get to be audited by the auditors. You have more credential and credibility and trust. Okay, perpetually succession. That means once you pass away, the company is still in existence. You may have other shareholders or directors to help you to run this business. You run it up in way of sole proprietor. If you are not here, if you pass away, the sole proprietor will be gone. Okay. The next one, of course, if you run the Sanyam Berhad, there's a higher compliances cost. You need to pay secretary, tax fees, and audit fees. Okay, and less flexibility. Sometimes you make decision, you need to get the approval from the board of directors or shareholders, and you need to call secretary, hey, I need to pass the resolution because I need to buy a car. Okay, all these are regulatory compliances. You need to be in compliances of. Okay, so let's have a coffee break of 10 minutes. 10 minutes, so we come back at 3:37. Okay, see you. After that, we will discuss more about the company tax. See you on 3:37. Thank you. Oh. Hi, is anyone back? If you are back, please press 300 for me. Then I know you are back. Then we can continue with the corporate tax changes. Yeah, just to notify, just press 300. 000 if you are back. Hi, testing mic. Can you hear me? Yeah, thank you. Okay, let's the corporate tax rate. Actually, for this budget 2025. Oh, thank you, Atira. Actually, for this budget 2025, they aren't, have many changes for the corporate tax as well, for the personal tax and for the corporate tax. Yeah, but here these are the some updates. This is the tax incentive for the implementation of the e-invoicing. Okay, so just have a very quick summary. May I know your company is in phase 1, phase 2, or phase 3? If in phase 1, so you just need to press 1. If your company invoicing implementation is in phase 2, you need to press 2. If in other phase 3, then you just need to press 3 in this chat box. Come, just let me know. Your company is under which phase? Oh, Sarah, phase 3, thank you. Attila is in phase 1. Wow. How about the rest? Okay, because due for the e-invoice implementation, I believe my clients also, they need to buy additional of the ICT equipment, or they need to upgrade of their computer software. It could be their accounting software, and it could be the middleware. Yeah, for the integration with the income tax. Besides that, you may need to engage the consultancy, licensing and incidental fees, which is for you to customize of your computer software development. That means when you purchase all this equipment, we can claim capital allowances. But now, currently, you have to use 3 years. In order, you need 3 years, yeah, you see? In order for you to utilize, to finish claiming this cost within 3 years. When it's first year, you can claim 60%, second year 20%, and third year is 20% of the annual allowances. So they will now, under the budget 2025, so they will speed up the process. They allow you to claim faster, which is they say, hey, you no need to wait for 3 years. So you can shorten the claiming period from 3 years to 2 years to enjoy your tax savings faster. So first year, you can claim 60%. And second year, you can claim the balance of 40%. You finish claiming within 2 years. Okay, so quickly go and buy the expenses, the ICT equipment or upgrade of your accounting software. It could be in any software in the market. So you can, software package, you can enjoy this tax incentive. Second tax incentive is for the employer's implementation of the flexible working arrangement. Actually, this is just last time you can claim up to 200%, and now when you make the application from 1st January 2025 to 31st December 2027 through this Talent Corp Malaysia, you can claim extra 50% on the capital expenditure incurred, but they will cap it to a limit of 500,000. Yeah, this 500,000. So what are the expenses incurred? You can make the claim. So it refers to the capacity building. So what does that mean of capacity building? Actually, capacity building is when you do for the Google search, this is a process to improve of your, whether individuals or organizations, for the better process, to upgrade of their skills, to improve of the efficiency. Of course, inside here, you may involve some of the trainings to upskills of your workers' knowledge and the skill base. Yeah, and also it do include of the software acquisition for your flexible working incurred by the bosses, by the companies. So you can purchase of the software, or you get the trainer to train of your workers for the better efficiency or the work process flow to make it more automate. Yeah, all this training you can claim. You can, if you incur for 500,000, so the government will give you 50% extra. That means the expenses you can claim on these expenses is 500,000 plus another 250,000. You can claim 750,000 in total. Okay, so this act has been gazetted on year 2021. So this is the another extension of the time you can claim up to another 3 more years. Okay, another one, because our government, they want to encourage the women to come back to work. Okay, most of the women, after they give birth, then they have the family. So the husband asks them to what? To stop the work or to quit the work because need to take care of the children. But before they marry or before they give birth, they are what? It's the workaholic. They are the professional ladies. So the government say, hey, they should encourage when the kids, the children are grown up, maybe above 12 years old or 10 years old, so they will encourage the woman to come back and work. So in this case, the government say, hey, if you get the woman returning to work, the condition is the woman on a career break of at least 2 years, and then now they return to work. Okay, and you can claim 50% further deduction on the salary that you give to the woman returning to work. For example, let's say you get a woman returning to work and you're paying her 10,000 per month. 1 year, the salary will be 120,000. So 120,000 per year, and government allowed you to claim 60,000 more, you know? Yeah. So 60,000 more, how much is your tax benefit? Your tax benefit is how much? Your tax benefit is, here, 14,400 tax savings because of this, encourage the woman returning to work. And this is for the company. Company, they can enjoy the tax savings of 14,400. How about the woman themselves? How about their personal tax? The same also, they can get a tax exemption on their personal tax up to 12 months. That means they are tax exempted. They no need to pay tax on 120,000 per annum that the salary they receive every year for 1 year. Okay? So it's a both parties. One for the employer, 50% more on the salary paid to women returning to work. And the one is on the personal tax, themselves. That means the ladies is not liable to tax for 12 months. Next one. This one the same, tax incentive for employer providing caregiving leave benefits. Let's say your boss is very good. My boss, Adrian, very good. They say, hey, Cindy, I give you pay leave. That means you are on leave, but I still pay you, you know, even though you didn't work because you're on leave. You're on leave because you want to take care of one of your children. Your children is sick or anyone, okay, or disabled family members. Here is referred to your close family members. It can be with your spouse, it can be with your children, but it's not your auntie or uncle or niece or nephew. The bosses still pay you salary even though you're not working, you're on leave. That means for the company-wise, they will get the deduction of 50% extra. And this incentive, you have to apply to the same like Talent Corp Malaysia Berhad. So you have to, this is the website. So actually you can claim quite many, tax incentive here. So feel free to log on to this website and check what are the tax incentives given by the government and how your company benefited from that. Okay, please check. And it has to apply to the Talent Corp from 1st January 2025 to 31st December 2027, 3 years periods. Carbon tax. Well, have you heard about the carbon tax? Because Malaysia government, they have the aim. Government said they want to have zero emission by year of 2050. Our Malaysian government, zero emission by 2050. So government announced, due to these goals, so government announced the imposition of the carbon tax on a specific industry, on iron and steel industry and energy industry. We are not sure when this will cover to all the industry, but at this moment for a start, they will impose to these two industry. How much is the rate, carbon tax rate? We are not sure yet. We're still pending for the government to announce on this. But let's look at our nearest neighbor, which is Singapore. Actually, Singapore has been implemented this carbon tax in year 2019. For a start, they only implement 5 ringgit, not ringgit, Sing dollar, 5 Sing dollar per ton. But now they have improved to 15 Sing per ton in year 2024. And they targeted to increase it up to Sing dollar 80 ringgit per ton by year of 2030. That's why the Singapore government, they keep increasing of this carbon tax. But when they receive this revenue, so in return, they will use the money to do somewhat, to reinvest in a green technology to reduce the CO2 emission. Okay, let's move on to the EPF measures for the foreign workers. And IRB, not IRB, the government has announced that we have mandatory contributions to all the foreign workers. So what do you mean? That means in future, if you have a maid, you also need to contribute EPF for your maid. Yeah, so they will segregate into the few stages. So the first stages will be affected about 2 million non-Malaysia workers in Malaysia. So how much is the rate? It's not announced yet by the government. But let's look at our current scenario. Currently, contribution rate for the employees who are not Malaysia citizen, the employee shares is only 5 ringgit. Yeah, but the employee, they need to contribute 11% to the EPF. This is the what? With the license non-Malaysia citizen, that means the foreign workers, they have the work permit. So you have to contribute the EPF to them. When they're below 60 years old, so they themselves contribute 11%, but for the company, for the employer, only need to contribute 5 ringgit only, this column. Okay, so what is the impact? Have you heard about these minimum wages? Actually, this minimum wages has been increased from $900 to 1,000 to 1,002, 1,005, and now increased to 1,007. If you have 5 workers and more, the minimum wages will be increased to 1,007 from next year, 1st February 2025. That means you have another 3 months only. Okay? So, but you have a small business, so the government allow you to defer to 1st of August 2025. So you have 2 days, 1st February 2025. But for the small business, less than 5 staff, yeah, your minimum wages have to be increased. Minimum wages will be implemented until 1st August 2025. Okay, this is the chart for you to show that since year 2015, for the past 10 years, the salary minimum wage in Malaysia has been increased from $900 only at that time, now zoom up to 1,007. Yeah. So what is the example of the starting salary in the different industry? Let's look at this one announced and highlighted in the budget 2025. Yeah, Industry and Production Technician, 2009 and 2003. Mechanical engineer starting pay, 3,000, close to 3,004. Wow. How about the professional creative content designer, about 3,000? Yeah, so these are the starting pay for a fresh grad, as highlights in the budget 2025. I'm not sure how much is the accountant's starting salary pay. Any idea? But engineering is high. Mechanical engineering, their starting pay 3,004. Basically, IT department, I think their starting pay, and IT department also, their starting pay is higher than accounts. Okay, let's see the impact here. Okay, let's say we have Baju Manufacturing Sdn Bhd, they have 100 workers, 100 workers. And then when they implement for the minimum wages plus the EPF, how is the impact to this Baju Manufacturing Sdn Bhd? At this moment, currently, okay, if they have 100 workers, one worker is 1,005, they need to pay 150,000 only. No EPF is required. So it's 150,000. But after that, during this minimum wages been implemented, plus the EPF, so they need to pay 170,500. Wow, how much is the cost increase? Here it says increase by 14%. Yeah, but as you know, if this is a manufacturing company, how much is the net profit? Bottom line profit, it could be less than 14%. Yeah, so that's why it will definitely reduce of their bottom line profit. Correct or not? So meaning to say, but if this manufacturing company, Baju Manufacturing Sdn Bhd, they want to remain of their bottom line profit, so what will they do? Cost increase, correct or not? So they will pass on the cost to their customer. So whatever they sell, if they're selling the sugar or whatever is not sugar, maybe they're selling the handphone or they're selling the cosmetic products. Yes. So they will pass on the cost to their customer. So at the end, the cost will be increased. So let's look at, this is for 1 month only. Let's look at 1 full year impact. 1 month increased by 20,500. 1 full year will increase by 246,000 per year. I'm talking about 100 foreign workers only. How about those very huge manufacturing companies? They could have 500 foreign workers, 1,000 foreign workers. This will be a big impact to the manufacturing companies. Okay, so you have to be prepare of your budget and think away how to reduce of the cost. If this one cannot be reduced, then how to use the software or automate of your production in order to reduce your production cost to the minimum levels. Okay, this is a family office. Anyone heard about the family office? If you heard about family office, say yes. If no, then please no in the chat box. At least I know. Family office. Oh, Tan say no. Okay, who else? Any idea of this family office? How about the rest? Have you heard about this family office? Okay, QQ say no. Okay, this is the Forest City. Yeah? Where is Forest City? Forest City is in Johor Bahru. Johor Bahru. It is located at Pulau Wan Forest City. So the government say, if you set up a new family office in Forest City, then you can claim a special tax incentive. So your tax incentive Okay, let me explain what is the family office first. Actually, family office is catered for the high net worth individuals or high net worth families. That means they will form a companies. It can be the holding companies to own their asset. Yeah, to asset in these holding companies, and these companies is run by the professionals. It could be the finance professionals or certified practitioners. It can be the tax agents or the lawyer as well. Yeah. So what are the role of the family office? Of course, they will help you to manage of your wealth in terms of investment management and asset allocation. That means when to buy, how to invest of your asset based on your risk tolerate. That means if you either you're high risk, medium risk, or low risk, they will based on your risk appetite to invest for the asset allocation. Number two, they will take care of your tax and legal services. That's why there's have a come for the tax agent and legal panel will be in the service also in the family office. Then for the estate planning, that means the family office, they will ensure a smooth transitions of the your wealth to pass down to the next generation, and they will just follow your instruction. Instruction means I want to allocate how much fund for my education for my children, how much for my lifestyle, or even you can instruct the family office that I want to give my son and my daughter, like my son and my daughter, how much is the allowances, 10,000 or 20,000 per month only. And they will cover of your lifestyle. They will do the travel arrangement for you. Yes. Sometimes they will help you to manage of your real estate managing, yeah, for your asset portfolio. And you can also come up with your family meeting. You can fix up and to inform your family members when, yeah, you want to have family meetings, whether once a year or twice a year. Yes, these are the major role of the family office. Because the rich men, they do not have time to manage and run this one on their own. So they will let the expertise to run this. If what is the C? The family office must be, you need to incorporate a new one. Yeah, a new investment companies. And here, AUP is the asset under management must be not less than 30 million. That means you have to put your asset in this family office. The asset value cannot be less than 30 million. Okay, so what are the tax incentives? That means it's very good because it's 0% corporate tax rate for the family office under the single family scheme. What does it mean of single family scheme? Yeah? Single family scheme means this is only, the company only manage your family office only. They just have one client, which is your family office. They do not have multiple clients. This is called single family scheme. And normally when you appoint someone to manage the family office, it could be professional, it could be accountant, it could be tax agent, it could be lawyers. Yes, it could be the CFP, professional financial planner, to run this family office for you, so they will charge you accordingly. According to the statistics, the family office, the charging for the single family office, they may charge you about 1 million to 3 million per year. This is the charging for the family office. Of course, they work for you, they need to charge you. But for the multi-family office, that means this company not just manage your family. They have many clients. They may have 30 family office. They run this. So they may charge you based on your percentage on the asset under management. Yeah. That means it could be ranging from 0.5% to 1.5%. Okay. So a certain percentage. And the tax incentive is 5% tax rate is on the global business services. And you are the personal tax, if you are working and based in this foreign city, you'll be liable to 15% for the knowledge workers. Yeah, 15% tax only is cheap. So you may consider this, whether you want to set up a family office for your high net worth individuals, for your clients, or for your family, because the tax is very attractive, is 0%. Yeah. And what is the impact? Impact is there are more capital inflow coming into Malaysia and attract more high net worth individual to set up their family office in Johor, in foreign city here. Yeah, so this is the highlights of the family office. In Singapore, there are many family office. I think in total, they have about 600 plus family office in Singapore. So Malaysia, under our Prime Minister also, they encourage the high net worth individual to set up the family office in Malaysia. So this is one of the move. That's why they give the tax incentive on the new family office setup. Okay, property gain tax, RPGT. So RPGT in general, there are three categories. If you hold your properties in the Sdn Bhd, in the 6 years when you dispose of your property, is 10% will be taxable on the gain of disposal of your property. How about individuals? If I dispose my property in the 6 years or beyond, so I pay zero tax, zero tax on my gain. If you are the individuals, which is your non-citizen or foreigners, if you buy the properties, you dispose on the 1st to 5th years, your tax rate will be taxed at flat of 30%. In the 6 years only, it will be reduced to 10%. You're still liable to tax. So this is the bird's eye view of the RPGT rate. So this is the scenario given, just let you to have a better understanding. Calculation of the RPGT. Adam and Alicia, let's say husband and wife. Both of them are Malaysian. Okay, both of them are Malaysian. And then they purchase the house. They stay at the Mont Kiara. They purchase this condominium back in year 2018 at 1 million. Wow, 1 million, huh? On 30th June 2020, that means less than 3 years. 2018, 2019, until 31st December 2020 is only full 3 years. So now mid 2020 is 2.5 years. So they're thinking they want to upgrade to the better house. That's why they need to sell the existing house. So they managed to sell at 1.3 million. How much is their profit? Their total gain is 300,000, correct? Split into husband and wife, so 150 each. So the less the deduction. Deduction is, it could be your stamp duty, agency fees, some of your repair maintenance costs, and less your personal exemption. At the end, they need to pay the gain on the disposal times the tax rate of maximum tax rate of 30%. Why? Because that's disposed within 3 years. How much is the total RPGT tax for Adam and Alicia? How much? It's 31,500 plus 31,500. They have to pay about 63,000 when they do dispose on 30th June 2020. Okay, if you are their accountants or you are their tax agents, so what is your planning? What is your advice to them? Any advice? Anyone know what's the advice to them? Yeah, the tax planning on the RPGT. You have to ask Adam and Alicia, can you hold or not? Wait until year 2021. So you save another 10%. It will drop from 30% RPGT tax, it will drop to 20%. So you save 10%. Okay, so you save 21,000. Okay. Second, in future, if you want to buy this new property, what should you do? You should avoid joining. Don't want to say, I want to be fair. Always want to be fair. My husband 50%, me also 50%. No. Sometimes you have to think of the tax planning. Do you know that we have lifetime exemption? Yeah, every one of us, we are entitled to claim for this lifetime exemption on the RPGT. Everyone have one chance only. So imagine in this case, okay, they don't want to pay RPGT. Okay, they claim the lifetime asset. They save 63,000. But in the next property, they make the higher profit, so they are not entitled to claim this anymore. So we will advise you to put husband one name only for one properties under the husband name or either under the wife name. At least husband can claim one time, the wife can claim one time. If not, husband and wife, same property, you already utilize the personal lifetime exemption RPGT relief. Okay, so the thing is when you ask the lawyer to submit of your CTHT form on the disposal, normally lawyer will very straightforward. They will not ask you, do you have extra allowable expenses that I can deduct off? You know, actually, do you know that the stamp duty that you can make a claim when you purchase of the properties, the agent fees, when you ask the agent to sell your properties, you pay to the agent, say 1.3 million, 2%, 26,000 you pay to the agent. Agent fees also you can make a deduction. Legal fees on your disposal and purchase. Expansion of your property means it's a repair and maintenance. Any renovation, you should keep the bill. Then you can claim accordingly. So all these expenses, bear in mind, definitely it will reduce of your RPGT, real property gain tax. Okay. Next one, these are the example of the exemption of the real property gain tax. For example, transfer between the spouse must be citizen. That means the husband and wife. Husband need to transfer to the wife. Yeah, is real property gain tax exemption. How about the gift between the parents, children, and grandpa? Grandpa want to transfer the properties, the asset to the grandchildren. Yeah, when grandpa bought the property is at 100,000 only 20 years ago. And this property worth 1 million 20 years later. There's a gain of 900,000. Is it subject to RPGT? The answer here is no. Why? Because it's under the exemption listing. Okay. And when you go through the asset for a deceased person, when you've passed the executor, they want to transfer the asset to the beneficiary. Also, it's the RPGT exemption list. This is a stamp duty. Stamp duty is like the self-assessment system. Under the income tax, already in the self-assessment system for many years. That means what you declare to the income tax, they will accept in faith, in a good faith. That means they trust you, but they will conduct a tax audit on your case. Maybe within 7 years, they will come once to check whether you declare in a what? Full faith or not. That means correctly or not. It comes to the stamp duty. Currently, the stamp duty, when we want to pay the stamp duty, we will lodge the document first. Then few days later, the stamp duty officer, they will send us the email or announcement to let us know how much is our stamp duty that we need to pay. Do you have this kind of process or experience this or not? Yeah, you have to wait few days later, they will let you know, hey, Cindy, you need to pay 4,000 stamp duty. But under the self-assessment, they say you have to assess on yourself on how much the stamp duty you need to pay and pay accordingly. So they will not what? They will not come and check on you. They will not come and tell you how much stamp duty you need to pay. But of course, they will conduct the tax audit on a randomly basis. They have 3 phases. Phase 1 will start from 1st January 2026. It's only applicable for the agreement on the renter, securities, and general stampings. When you sign the rental tenancy agreement, you have to do the self-assessment when it comes for the 1st January 2026. Second phase is referred to the transfer of the property ownership, your buy and sell of the properties. Third phase, which is on 1st January 2028, any other instrument or agreement other than phase 1 or phase 2, loan agreement. It could be under the phase 3. Okay, stamp duty paid on the loan agreement. These are the stamp duty rates. Okay, for those who don't know, so this is a very good reference. Let's say you buy the property of 100,000, they will tax you 1%. That means you need to pay 1,000 stamp duty. How about the subsequent 400,000, 400 times 2%, so it's 800,000. That's why Cindy said just now, if you buy the property of what? 500,000, you have to pay stamp duty of 9,000. So this is the tax rate. Do you know that foreigner, they have to pay the flat tax rate of 4%, you know, stamp duty. It's not based on this scale rate. They need to pay flat rate. If they buy $1 million property, they have to pay 1 million times 4%. They have to pay 40,000. Yeah, stamp duty. Okay. For example, if you buy a stamp duty, a house worth 800,000, the stamp duty you need to pay is 18,000. So if you buy a 800,000 house, how much the money that you need to stand by? 10% down payment, correct? 80,000 plus legal fees, stamp duties on the loans. So you need to stand by at least 20% of 800,000, which is 160,000, in order to purchase a 800,000 house. Okay, unless you buy direct from the developer, it's a what? Zero entry cost. Developer will say what? 10% is waiver or discount. They will bear all your legal fees plus stamp duty. That's why they call this scheme as a zero entry cost when you purchase of your first house. These are the exemption on the stamp duty. Yeah, some of the exemption, like I mentioned just now, I have mentioned twice. First time buyer, when you purchase the property below 500,000, is 100% waived by end of year 2025. That means next year. Next year is the last chance for you to buy the first house, which is below 500,000. Second is when you transfer your property, okay, through the Will and Foreign Aid Distribution Act. This is referred to the Islamic, yeah. So they don't have will, so they will transfer through the foreign aid. So the stamp duty paid is on an instrument basis, which is you need to pay 10 ringgit only. Yeah. And other scheme also, yeah. So let's look at this example. On November 2024, Awang is the old uncle, intends to transfer the property to his son Anthony. But Awang bought this house in January 2000 at 600,000. 24 years later, wow, the property value at 2 million. So he earned about the property value increased by 1.4 million. All right. But Awang said, hey, I want to transfer during lifetime. So what is the cost, stamp duty cost for Awang? Stamp duty is 64,000. Stamp duty cost will based on the market value, 2 million. Yes, so based on the 2 million, the stamp duty need to pay is 64,000. So if you are the tax agent or you know this act, very good. So you may ask Awang, hey, why not? You don't transfer now. If not, once you transfer, your son will send you to nursery home. Now, yeah, for your protection purposes, you transfer. After you pass away, only you transfer to them via the will. So the cost-wise, the stamp duty you need to pay is only 10 ringgit. You see the differences. Then, how much that you can save, you will transfer after what? You pass away through the will. You can save about 64,000. This is the beautiful of the timing when you transfer the property to your heirs, okay, to your next generations. Indirect taxes and others. We have stamp sales tax imposed on the expansion of scope. Wow. You see, the salmon and avocado, they treat as the imported premium goods. I have one client, I think I met them this week. They say, Cindy, every day I must eat avocado. Then how? She took half of avocado and blend it with the milk every day. Wow. Now it says 6 ringgit. If this one has been increased by next year, 1st May 2025, it may cost 7 ringgit. Yeah. He said, how? Wow. Every day, you use it. So some of the restaurant, they have avocado. I think I saw some of the restaurant, they use avocado, as their main menu. So this one, how? Their costing will be increased as well. Because the sales tax, I'm not sure how many percent will impose. Because sales tax, we have 5% and we have 10%. Okay, so that's why the list is not finalized yet. So pending for the final listing, but I believe there are more and more listing will be listed in this imported premium goods listing. Okay, that means what does it mean of non-essential item? With avocado or without avocado, we still can what? We still alive. We still can live. Yeah, this is not the basic items. Non-essential items. Yeah? Service tax imposed. The government say they will impose the service tax, new services on 1st May 2025. So we do not have the listing yet, so we have to wait and see. Okay, this is a very quick update on the service tax. Do you know that service tax, they are additional services to add on in the service tax listing? The first one is the logistic services. Logistic services last time 0%, but now they have to impose 6%. Karaoke, are you a karaoke lovers or not? Last time when you pay the bill, 1,000. Now the karaoke center, they will charge you 1,000 plus 8%, 1,080. Did you realize or not? Yeah, financial services, all these additional services has been, added in as additional services since 1st March 2024. How about this? Expansion of the scope and increase of the tax rate. Okay, this is on the repair maintenance. It can be repair maintenance of the machines, repair maintenance of the equipments. Yeah, repair maintenance, like we have preventive and corrective. So what does it mean of preventive? Preventive, that means is the routine maintenance. That means you have signed a contract with your customer. Hey, I will come and repair of your photostat machine. Very close to us, so they will come every month. So this one called preventive maintenance. When they charge us, so they have to charge us with the subject to SST of 6%. But from 1st March onwards, they will charge us SST of 8%, no more 6%. Huh? That means it's the preventive on a routine basis, whether on a yearly, quarterly basis. You send your car for the service, or you send your machine for the service on quarterly. That one is fall under the preventive maintenance. How about corrective maintenance? That means my aircon, office aircon is not workable, already spoiled immediately, or I better, it's very hot, it's super hot, I have to call my aircon guy to come and service the aircon, repair. So that one is called corrective. When the machine spoiled, is not running, it's not functioning well, so it's the corrective, back to the normal track. So last time was 0%, now increased to 8%. So you have to be careful. That's why last time our client, they have to ask, Cindy, is this preventive or this service is corrective or not? Now customs said, hey, no need so mafan. Everything under the repair maintenance, everything you have to impose service tax of 8%. No need to ask me anymore. Okay? Government grants. Yeah, this is good. Government grants, there are many. So we have listed down about 15 of the government grants here. So I'm not going to explain one by one. Okay, but you are the bosses, or you're the accountants of your companies, then you can refer to this government grant and see which grants that suits to your companies. You can Google search. That means you have to key in the types of the grants. Then you can Google search, and they have a link for you to download of the guideline, and even though the form and the steps how to apply of the grant. Yeah, these are the grants. But we have listed down the top 6 Malaysia government grants here. Okay, there's the link into it. So it's pretty simple. You can click the link and log in and refer. Most of the government grants, the minimum is they must be 51% Malaysian owned. And certain government grants, they must see your revenue. Either is 300,000 and above, or some is about 1 million and above for your revenue. The second thing is they must be at least 3 years in business or 6 months in business. It depends on which grant are you applying. Okay, so these are the government grants. The smart automation grants, you can entitle to claim up to 1 million. So there are terms and conditions also. So it's a matching grant. Matching grant means it's 70 and 30%. That means 70 and 30%, what does it mean? Okay, like here. That means if you spend incur 1,000, the government will subsidize 700 and the company will have to bear the $300. So it's a matching grant. And an SME digitalization grant, 50% matching grant, this is very common. That means maximum you can claim up to 10,000 only, or 50% or 10,000, whichever is higher. Let's say you purchase accounting software, you upgrade of your system, you can go for this grant. Yeah, 50% matching grant. How to apply? Click into this website, Bank Simpanan Nasional. Then all the steps are there. Okay. Industrial 4.0 incentive, matching grant also, government pays bear 70% and the company bear 30%. Sandbox, this is a testing grant for the high technology entrepreneurships to test your products and your services. But before you apply this sandbox grant, you have to get the approval under this National Technology and Innovative Sandbox, NTIS. Click into here and see whether your company is eligible to apply for the grant or not. Okay, these are the steps. Step by step, we have listed down the steps, 4 steps, how to apply the grant. And these are the basic documents normally they will ask you. Yeah, so you have to prepare. It depends on the different grant, they may ask you for the different documents to be submitted. Okay, digital grant. 5,000, just now I have mentioned. MSME digital grant. Yeah, some of our clients, they have successfully to apply for the grant. You may ask me, is Cindy true or not? Huh? Yeah, it's true. The money is there. This is a free money from the government. Yes, we should take this opportunity to apply, especially when you need to incur some expenses on your point of sales, on your CRM, or the accounting or tax software. For the e-invoice era, you can go and apply it, but maximum, they will allow you to claim 5,000. Yeah? You see here, 60% Malaysian owned. You cannot be applied for the new business. It's 6 months, at least in the history. Your sales is more than 50,000. So digitalization grant, you do not receive any digitalization grant before. Yeah. This is the market development grant. You can lifetime, you can apply, and you can get this grant up to 300,000. It's targeted to the SME company, okay, professional services provider, whether it's sole proprietor or partnership, you still can apply. Yeah, the form of grant, lifetime, it says 300,000 maximum. These are the criteria. It refers to the trade fairs or exhibition. Okay, include expenses of utilizing the digital marketing tools as well. It can be in Malaysia or it can be in overseas. So go where? So you have to go to Matrix website and check further on this grant. Okay, agency in charge, that means they are the one who approve the grants. Loans. Okay, certain companies, when they come for the expansion, they need extra cash to bump in. You may get the loan from the what? Bank institution. Of course, the bank institution. Yeah, of course, the bank institution is expensive. If you want to get the business loan, they may charge you 7 to 8%. Yeah, are you agree? Yes, working capital loan, and some more their criteria is getting very rigid in order to finance you, to give you a loan. So the government say, hey, we have government loans. Yeah, there are many government loans has been allocated by the government, but it's just that we are not aware of it. Yes, sometimes it's a green loan. That means the government do not, ask any collateral from you, or sometimes of the loan is the government is the guarantor for you as well. So go and check whether if you need any finance or loan, so can check for the government loans whether your company is eligible or not. Actually, it's very cheap and convenient. Yes, these are the SME loans, SME financing guarantees loan. Yeah, you see a lot of loans for the small trader as well. Yeah, for small trader. So these are the loans. Okay, so next one. Okay, this is the example, Hanis. Okay, Hanis. Hanis is graduated from the public university in Malaysia. He got a job, but he wanted to run the business. He decided to start a bakery shop. Bakery shop. Then he have no money. Then he can borrow 1 million, at a flat rate for 7 years installment. Flat rate, how much? The overview, let's look at it. Okay. This SME Bank Business Accelerator Program, you can get the loan amount from 50,000 to 1 million. The profit rate is your interest rate is only 4% per annum. It's a flat rate. It's very cheap. It's very cheap. Yeah. So the stamp duty you need to pay is only 10 ringgit only. Yes, very cheap. Minimum. How much is your criteria to get this loan? Your minimum sales is 300,000 per year. Yeah, you must in operation at least 6 months, at least 60% Malaysian owned. Yeah, so it applies to the MSME, micro, small, medium enterprise. Yeah, this is one of the example of the government loans. E-invoice impacts and updates. What's the answer here for QQ? For grant, is subsidiaries of listed company eligible to apply? So for the grant, normally it's applied for the SME companies, SME, small, medium enterprise company. So you have to check because subsidiary to the listed company, according to the, they have the criteria. Yes. So you have to check for the authority whether this one is eligible to claim or not. Normally it's referred to SME. For the listed company, you are not allowed to apply for the grant. But for the income tax, if you're holding companies, 100 depends on how many percent that you hold by the holding companies. Is 100% hold because you're direct or indirectly. Okay, the payout share capital is more than 2.5 million, and the subsidiaries company for the income tax perspective is not a SME. Yeah, but for the grants, they have different definitions. Yeah, this one I'm not so sure. You have to check. If you want to apply for the MTech grant or Matric, you can go and check around. So the officers are very friendly. Okay, let's move on to the e-invoice impacts and updates. Okay, the income tax, they give the 6 months relaxation period for the e-invoice. Okay, so how do we check the 6 months relaxation period for the e-invoice? For the phase 1, is on 1st August 2024. So you can defer it until 31st January 2025. Phase 2, you can defer. We look at the last column. Phase 2, when you have the turnover between 25 million to 100 million, you will fall in the phase 2 category for the e-invoice implementation. So you will defer from 1st January 2025 to 30th June 2025. The last phase will defer until next year, 31st December 2025. So what does that mean? For the 6 month relaxation period, That means the good thing is during these 6 months, you can choose whether you want to pursue for these 6 months or you want to opt up. Okay, that means you want to implement on the dot. You do want to utilize this 6 months relaxation period. If you utilize this 6 month relaxation period, the good thing is, the benefit is, you no need to issue individual e-invoice. That means you have the rights to reject your customer. Hey, when your customer asks a copy of the e-invoice, you can tell your customer, now is relaxation period 6 months. So I have the right not to issue you the e-invoice. You still follow the old practice. You issue the normal invoice to your customer. But IRB says, doesn't mean that you don't need to do anything. You still need to have to issue one consolidated e-invoice to the income tax every month. You still need to tell income tax how much is your sales on a monthly basis. It goes same with the self-bill invoice. You are not required to issue individual self-bill invoice, but you are required to issue consolidated self-bill invoice, which is once a month, and submit to the income tax on 7 of the following months. This is the good news for the MSME. That means if your business turnover is less than 150,000, so you are totally up from the e-invoice community. That means you are not required to issue e-invoice and you're not required to issue self-bill e-invoice. But lately, IRB, there's the latest guideline on the MSME. There's a terms and conditions to be imposed on this MSME. The guideline is issued on 1st October 2024. Okay, so because due to the time constraint, we are not going to explain all these changes now, but we will have another session. Yeah, we have e-invoice session, which is free. It's on 15th of November. So feel free to join us. So we will tell you what is the latest guideline on the invoice by the income tax. Anyhow, it's just 2.5 hour talk. Okay, we have the Mandarin session in the morning and we have the English session in the afternoon. Then our next budget talk, if you think that our budget talk is very good and benefited to you, so please share our seminar. The next seminar will be on 8th of November. Please share to your colleagues and friends. So welcome to join us. The same, morning is a Mandarin session and English session will be in the afternoon session. And the last, we have the compliances for the HR managers, which is suitable for your finance team, your accountant, and your HR managers to join us. So it's HRDF claimable. We will highlight on the Form E and EA, the personal tax planning, personal tax allowances, exemption. We have the PCB audit, and then we have the latest guideline on the ePCB Plus. So this course we are selling at a cost of 699. But if you register with us today, so you are required to pay 500 only. So you can get a more higher deduction if you register today. Remember, it's HRDF claimable. So all the details, like if you want to register this, so please scan this QR code and register with us. The next budget talk will be on 8th of November. Okay, same timing. This is free also. Yeah, it's the e-invoice. We have English and we have the Mandarin session. I give you 1 minute to scan on this QR code. So no worries, the slide we will convert, we will send you for the PDF format. We will send it to you either in tomorrow or the day after tomorrow. Yes, all this slide. So you can scan and register with us, or you can log on to our Facebook or Instagram, Adrian Your Tax KL. Yes, to register in our Facebook or Instagram. Okay, this is the unlocking the HR tax strategies from benefit in kind to PCP calculation as well, and what are the tax exemption allowances. Yeah. So plus the new ePCB Plus. So this talk will be on 25th of November. So feel free to join us. So any questions? Yeah, we open the floor to the Q&A. So welcome to key in your chat box. Yeah, any questions? Yeah. So this is feel free to contact us. Our office is in Aurora Place, Bukit Jalil. So you may directly call me. I'm Cindy, or call my tax director, Angie. These are our phone number, or email to us, hello@adrianyotaxkl.my, or visit our website as well. So I would like to say thank you for all. So Adrian Yo Tax KL, your trusted professional firms. So we always try the best to add value to our clients and go beyond number. So thank you for your participants. So if no question, then we will end our webinar today. So thank you all. Bye bye.